Hello, welcome to Data-Driven Investing. Today we're going to be covering SoFi's Q4 earnings, my preview and predictions for their earnings that's coming up in a couple of days. So let's get right into it. All right, here's the predictions I'm going to go through. We're going to cover members, why they're so important, and how many new members I think we're going to get. Originations, which will kind of segue into the lending segment, how much revenue we expect to see. Well, I expect to see from the lending segment, followed by financial services, tech platform, corporate revenue, which I will cover less in depth than in the article, adjusted EBITDA, and then net income EPS, and then we'll talk about guidance. Members is the lifeblood of SoFi's growth. They get people in the door, they get them into their financial services productivity loop. They're able to cross-sell them on checking and savings accounts, loans, their brokerage platform, etc. So what leads to growth in SoFi's business overall is growth in members. Fortunately, for this quarter, we actually have a lot more data than we've had in the past. So we know that they crossed the 10 million member mark on December 27th. So if you take a look at between September 30th and December 12th, that's 73 days, and we got 627,000 new members in that time, which equates to about 8,600 new members per day. If you were just to extrapolate that till the end of the quarter, you would end up with 790,000 new members added in that quarter. Now, one of the things that isn't necessarily accounted for in those numbers is the number of churned members. So if you actually look at the data that you see in front of you, you'll notice here, I'll point it out. So you'll notice that between, for example, Q2 and Q3, they added 756,000 new members. But if you look at the difference between 8.7, 8.8 million members and 9.4 million members, it doesn't equal this number. The difference between those two is what I refer to as churned members. So these are people who were on the platform and were eliminated or were removed from SoFi's platform. Most of the time, this is due to fraudulent activity, so they're removed from the platform. I think that that will continue moving forward. So prior to Q1 of this year, that had never happened before. In Q1, there was 31K of these, so 31,000 of these churned members. In Q2, it was only 2,000, so very small. In Q3, it was 157,000 members that were removed from the platform. I'm assuming there will be about 30,000, and I'm also assuming that there was a little bit of a slowdown to that 8,600 new members per day for the holidays. So my projections are for 810 new members and 780,000 net new members added in the quarter. As far as personal loans go, you can kind of see on this first graph in Q4 is seasonally a very weak quarter. So in 2021, Q4 was the lowest on an originations per member basis. In 2022, the same thing. In 2023, the same thing again. Now, in 2024, I think things are going to be a little bit different. And the reason why is because we know that SoFi was intentionally pulling back on lending in the first quarter. And so I don't expect the Q4 numbers to be quite as weak as they were in the first quarter. Additionally, we know that SoFi said that what would be giving them the green light to step on the pedal with lending again would be rate cuts. And we got 100 basis points of rate cuts in this quarter, 50 upfront in September, and then another 25 in November and another 25 in December. So that's why I think that the Q4, even though it'll be slightly weaker than Q3, I do think that it will still come in at about 450 total originations per member, which gives us about 4.55 billion originations for Q4. Moving on to student loan originations. So Q3 is seasonally usually a strong quarter. So I expect a little bit of pullback from Q3. And the reason why is because the third quarter is when students are going back to school. And so the in-school loans, those who are actually in school and need additional money in order to fund their education will take out student loans in Q3. Additionally, one thing that might provide a tailwind and might make it so that my $700 million in originations is a little low is that starting on October 1st, delinquencies and defaults started to be reported again to credit agencies. So that might be a tailwind because it would help people to want to refinance since their student loans are going into default, and it would affect their credit score. But I do expect this to be a little bit lower than it was last quarter, but still a good quarter for student loans. Home loans, again, it's kind of got dual headwinds. There's Q4 seasonality because nobody wants to move in the wintertime, especially around the holidays. And then the second thing is that there were rising 10-year treasury yields, and the 30-year mortgage rate mimics very closely the 10-year treasury yield. We saw that rise almost a full 1% during the quarter. So both of those are going to be headwinds this quarter. I think that SoFi will end up with about 400 million in originations. And then deposits. So the graph you see in front of you is broken up into demand, which is the same as checking deposits, but demand deposits and savings deposits, and then time deposits. So the blue bars are checking and savings deposits. The green bars is actually time deposits. These are more typically known as CDs, so certificates of deposits. And you can see that those time deposits have actually been coming off the last couple of quarters. I expect to see that again. Those have higher rates than either the checking or the savings deposits that SoFi is paying out. And so they are supplementing, so they're kind of offsetting some of those time deposits that are coming off the books with additional demand and savings deposits. And this will be a tailwind to net interest margin because, again, they're offsetting higher cost capital with lower cost capital through their deposit growth. That leads us into lending. So in front of you, you can see the lending revenue split between net interest income and non-interest income. So when SoFi originates a loan, they do recognize some of that revenue upfront through their fair values. Most of the green bars that you see in front of you are from those. So it's from originating new loans. The blue bars are the net interest income. So this is cash that they're collecting as people pay back their debt. You can see that kind of starting in the first quarter of 2022, which is when SoFi got their bank charter, the bulk of the revenue growth here in the lending segment is due to net interest income. And that will continue moving forward, even during Q4 and Q1, the most recent Q4 and the most recent Q1. You can see that despite the fact that they pulled back on originations, the net interest income was flat to up. So even though I expect personal loan originations to be slightly down quarter over quarter, I still expect lending to be fairly strong this quarter. The other thing that helps SoFi this quarter is the fact that they dropped the rates on their deposits a couple of times. So they went from 4.6% that they were paying out on their savings deposits all the way down to 4.0%. And today, they actually dropped it further to 3.8%, but that won't be recognized until the first quarter. But that should expand the blue bar even more because now their net interest margin, the difference between what they're paying their depositors and the interest that they're getting back on their loans, should have expanded, which means that they make more money in net interest income. So given all that, I think that SoFi will end up with $365 million in lending revenue in Q4 2024. Financial services, you can see that this is split up in those same two buckets. So the net interest income, which again has been expanding very quickly since they received their bank charter, and then non-interest income, which you can see exploded last quarter, and that was due to the loan platform business, which I covered in my prior video, if you want to go back and watch that. I think that the loan platform business will continue to expand, and that also that they'll continue to have these tailwinds as far as net interest income due to the deposits that we just kind of covered in the growth in deposits that we're going to see. One other thing that's a really interesting trend is that this in front of you is the average financial services revenue per member. You can see that it has actually never come down quarter over quarter. It looks like it kind of almost did between fourth quarter 2023 and first quarter of 2024, but this is actually just a slight increase. So the fact that this is going to be a really strong quarter for members added, the strongest of all that they've ever had. And the fact that this has never decreased quarter over quarter leads me to believe that once again, we're going to see a large increase in the financial services revenue. And I'm projecting that this number will be flat, trying to be a little bit conservative. And that leads to $259 million in financial services revenue, which is my prediction. And then the final segment is technology platform. Q4 is seasonally strong for the technology platform. That's because it's driven a lot by interchange revenue. So SoFi's technology platform is card issuing and processing. Obviously, there's a lot of more shopping in Q4 than any other quarter. And so, and Noto has talked about this in the past too, the fact that Q4 is seasonally stronger for the technology platform. I expect to see $112.5 million in revenue here, which would be 15% year-over-year growth. There might be a little room for upside there. I hope that we get some good news as far as the technology platform goes, but we'll kind of cover that in a minute. And then finally, there's corporate revenue. This is all over the place. So the blue bars are the quarterly total corporate revenue. It's composed mainly of two things. The first one is the corporate interest paid, which you can see on this. It's those orange bars that you see in front of you. That number is pretty consistent from quarter to quarter because that's just the amount of interest that they're paying on their corporate revolver and also on the senior convertible notes. It will actually come down in Q4 relative to Q3. So that orange bar will a little bit. They'll be paying a little bit less in interest because their corporate revolver is floating rate debt. And since the Fed cut rates, it follows those rate cuts. So that number will decrease a little bit. I'm just going to assume that overall the corporate revenue is going to be flat quarter over quarter. The other thing that makes a difference and what makes this so volatile is the funds transfer pricing model, which I won't get into in this video. But if you want to, you can visit datadinvesting.com and in my fourth quarter preview, I actually explain in a little bit more detail what goes into calculating that part. But gets in the weeds. It's a little too new or detailed for a video, so I'm not going to cover it here. So overall, that leads to a total adjusted net revenue of $697.5 million, which is both above the analyst estimates and SoFi's guidance. So SoFi's guidance is $655 million at the midpoint. Analyst estimates, when I wrote my article about this, were $678.5 million. Since then, a couple of analysts, so Compass Point came out with a new note. So did JP Morgan. And their estimates were actually raised for this quarter. So the new analyst estimate for Q4 as of today is $682 million. Either way, I'm predicting that they beat both their own guidance and analyst estimates. One thing to kind of be aware of is that the year-over-year growth for both revenue and EBITDA are going to look a little bit weaker this quarter. And that's because Q4 of last year is, if you remember, that was when they had their drive to become profitable and record their first quarter of GAAP profitability. And so Q4 of last year was a really, really difficult comp. So if you look at the year-over-year numbers, they won't look quite as good this quarter, but SoFi is still seeing consistent and good growth across the board. Moving on to adjusted EBITDA, you can see incremental EBITDA margins here on the left. They've guided long-term to only 30% EBITDA margins, and they're getting well north of that right now. I'm assuming that they'll have a quarter-over-quarter incremental margin of 45%, which is lower than most of the quarters you see over the past couple of years. And that leads to an adjusted EBITDA of $189.9 million, so just shy of $190 million. Again, this compares very favorably to analyst estimates, which are $172 million. And those actually went down despite the fact that analysts predicted higher revenue. They actually predicted lower EBITDA in the most recent reports, which is interesting. And SoFi's guidance is $174 million at the midpoint. This would only be a 4, so just under a 4.8% year-over-year growth, just under 5%. And again, because Q4 last year was a really difficult comp. which leads us to the EPS. So I'm assuming $126 million in adjustments between the adjusted EBITDA and net income. That's about where it was last quarter. And I don't expect things to change that much in this quarter. That leads to just under $61 million in net income. And then I'm assuming a 1% increase in the total shares outstanding from last quarter. And that leads to 5.6 cents of EPS, which would then round to 6 cents. Analyst estimates are 4 cents, and then SoFi's guidance was from 3 to 4 cents. So I think that they beat completely across the board on their Q4. But what I think is most exciting for this quarter is actually the 2025 revenue guidance. So this is from last year's fourth quarter call. This was Anthony Noto when they gave their long-term guidance. And they said, so the part that's highlighted, it says for the 2023 through 2026 time period, we see 20 to 25% compound annual revenue growth. So one of the interesting things as we look forward into 2025 is that analysts seem to be way behind as far as revenue growth goes. So the lines that you see in front of you, the orange line is analyst expectations. The blue line is based on that guidance that Noto gave, their 2026 guidance. That's the revenue growth that you'd see if you were seeing about, call it 25% CAGR between 2023 and 2026. So analysts are expecting only about 17% growth in 2025. I think it's much more likely that SoFi is going to put up something in the high 30s in terms of growth. Now, SoFi is very conservative in their guidance. I expect them to be conservative again. And while I think that internally they're probably targeting $3.4 billion in revenue for next year, I don't think they'll actually guide that high because they like to guide low and then beat their guidance and raise the full year guidance every single quarter. And that's what they've done every single quarter that they've been a public company thus far. I expect them to continue to do that, which means that the fortunate part is that analysts have left them a lot of margin between the analyst expectations and what I think SoFi is capable of achieving, meaning that SoFi can go in, and I expect their guidance to come in between, like I said, like it shows on the bottom, 3.15 billion and 3.25 billion as the range, because that's above analyst estimates. It will allow them to show Wall Street that they're above their expectations, but nevertheless give them the headroom that they have in order to still beat and raise every single quarter. I expect the same thing as far as EPS goes. So SoFi has guided for 55 to 80 cents of EPS in 2026. So the midpoint of that is 67.5 cents. This year's EPS is going to be somewhere around 13 cents of EPS. So just linearly increasing each year between now and 2026 would mean that SoFi would need to come in with 40 cents of EPS next year just to hit the midpoint of their guidance. I also expect that they will be towards the higher end of that guidance, that they'll get up in closer to the 80-cent range. But even to be conservative, you would conservatively think that they would be able to get 40 cents of EPS next year. Analyst estimates are only for 28 cents. So once again, they are doubting SoFi's guidance. Not only that, but last January, if you look at the analyst estimates from last January, they assumed that in 2024, SoFi would get 6 cents of EPS and 25 cents for 2024 and 25 cents of EPS for 2025. So despite the fact that SoFi beat their estimates by around 6 to 8 cents this year, they've only raised their 2025 guidance by 3 cents. So they've raised 2025 guidance by less than what SoFi beat this year's guidance. I can't understand why they would do that. It makes no sense whatsoever to me, but I'm okay with it because it means that when SoFi comes out with guidance next Monday, it's going to blow analyst expectations out of the water and still give them room to actually perform above it. So similar to what happened with the revenue, I think that SoFi will come in above analyst expectations. They'll guide for something like 30 to 35 cents of EPS. And then that once again leave them room to outperform each and every quarter and raise their guidance each and every quarter. One final thing, I kind of do expect them to reiterate, at the very least, they will reiterate their 2026 guidance. I think that they will actually update it a little bit, and I think it will be to raise the floor. So rather than call it 55 to 80 cents of EPS in 2026, I think they'll raise the floor and say now they're guiding for 60 to 80 cents of EPS in 2026. One final point I want to cover is the performance stock units that SoFi management has. So 2025 is the last full year they have in order to get to the point where they earn their performance stock units. Back when the company came public in 2021, management was granted a significant number of these stock units. And the only way they actually earn the stock is if the stock price raises to $25, $35, and $45 on or before June 1st, 2026. So they are granted 1/3 of the shares if the stock price gets to 25, the next third at 35, and then the final third at $45. And you can see in this table, so Anthony Noto, who's the CEO, Chris LaPointe, who's the CFO, and then Derek White, who is the CEO of Galileo, which is SoFi's technology platform, have a lot riding on this year. I think realistically, they probably need the stock price to get to about $35 per share by this time next year if they want to achieve that highest target, which means that SoFi management is extremely motivated this year to put up excellent numbers. I don't think that this will affect the way that they guide, but I do think it'll affect the way that they execute. Finally, some fun stuff that might come up in Q4. So just today, SAB 121 was repealed. What that means is that banks can custody crypto without having to count it as a liability on their balance sheet. Now that's technical, but basically what it means is that banks are much more likely to be able to hold and offer crypto on their platforms than they were before. I expect that there will be at least that I expect that management will address this head on, and that if not, then analysts will ask a question about it. So other things that we might see, and back to the crypto really, really quick. Noto actually responded to one of my tweets. He retweeted it and said that SoFi is interested in re-entering the crypto space. The other things that we might see, I really do think that we get a product announcement this quarter, whether it's Cash Coach or Level 1 options, or they're going, or the credit card is having a widespread rollout, or SoFi Plus paid subscription, something along those lines. I think they're going to roll out and they're going to announce on the earnings call. So thanks for everybody for listening. Still getting used to all of this, still getting better at this. This is not financial advice. Please like, please subscribe. And we will be streaming the earnings live Monday morning, and I'll be streaming it here on my channel as well. So look forward to seeing you then. Thanks everybody for watching, and we'll talk to you later.